Good morning. Today is Friday, August 25. So, yesterday, the day after Nvidia earnings, we saw a big sellout on the market. Here on the NASDAQ, we can see this candle, which represents Thursday, and we see how this candle engulfed completely the trading range of the previous day. Also, if we change some settings here, we can see the after hours trading range on Wednesday candle when Nvidia earnings came out, where it ended all the way over here. So, and still, even with that, we see that on Thursday, the price went higher than it, and then it finally got sold off, creating an even bigger trading range or candle. So, what happened? Why did this happen? So there are many possibilities of why did this happen. Big players stepped in the game and decided that, well, it's over. Traders that were actually playing the Nvidia earnings, they got what they wanted and they just got out. Also, it could be shorters. So there's many possibilities. Also, is the fact that we reach a very important high on the market itself, and that triggers sell stops or exit liquidity depending on where it went. Like right now, my chart is completely clean, but I'm gonna put everything now. So on my previous video, I talked about how I was looking for the price to reach higher all the way up to the exit liquidity up here, but it didn't, because actually what the price did was it hit another important area, which it got hit before already. It's just I didn't pay much attention to it. Because I thought it wasn't gonna be as big of a deal as the other ones that were higher. But yeah, it did hit hard right there. So right here, this is another area that could be considered as exit liquidity, or in my mind, I don't see it as exit liquidity. I will see it more as a sell stop raid. Like this area above this, since this is a leg down from the previous week, if you're trading this down, you will have your sell stops above this high. Wait, I just say sell stop? I'm sorry, it's a buy stop. Yeah, it's the opposite. All right, if you're shorting the market from up here, you're selling it. So in order to protect you from the market coming back up there, you put a buy stop. So when the market hit up there, it will trigger all those buy stops. And if those buy stops get triggered, what do you think is gonna happen? So when the market triggers the buy stops, the market is supposed to go higher, right? Because it's taking out the shorters. But in this case, we see that the market went up, it rated the whole area before reaching the exit liquidity on top, which is a target for the movement that started this week. It didn't reach the target. It didn't reach the target for this week movement as we projected before. And when it reached here and hit all the buy stops, so every person on retail basically, or usually retail people, that are the ones that have their buy stops in those areas, they get stopped out of the market. So who steps in when that happens? Who steps in when the buy stops get triggered? Big money, smart money. They come in, and then the market gets sold off immediately. Why? Because the market is always looking for liquidity, and yeah, although this may sound like conspiracy, the market always wins. So the market will always look for ways to get rid of uninformed traders, people that don't understand how the market works. They will not allow them to have their targets met without before creating big movements to the opposite side or where the target is. I'm not saying we're going back up there, but we might. But that's something that we have to see. So right now, we started the day down here, and since this candle, this big trading range rejected the previous day, I call that a rejection block, meaning that this previous day got rejected. And if that got rejected, I usually measure it. Because that's gonna come into play later on. Because if the price actually reaches all the way up there, it's gonna react to the 50% of the block itself of the trading range. It's gonna act as a rejection area. So if the price starts going up, it's gonna get rejected right here. Like I said, I'm not saying we're not going back up there yet. We might go back up there. But first, the market has to, or looks to, check out people of it. So we go down to the 1 hour now. On the 1 hour, we see this big movement that the market did. Like when I started watching this week, I said that we were looking to a bear flag forming. And then I said that the market was changing, and it changed and it created an opening broad wedge kind of pattern. And although I was saying that the market might reach the edge liquidity up here and might break above, it did totally the opposite. And that's why we always have a plan in place in order to get out of the market if things are not going our way. But like I said yesterday too, I look for correlation, and when I saw this sold out from this point with such power, I knew that things weren't gonna go the way that I thought they were gonna go. So I prepared myself for it, and yeah, I shorted the market too. Now, I have this area right here that says buy stops. That's basically the low of the previous day. Let's go back up to the daily to see that. That's the weekly. So this is Thursday. This is Wednesday. So the idea behind this buy stop area is because if you think like a retail trader, you have to think, how do retail traders trade? So they trade breakouts most of the time. So this right here will be the low of this day, right, of Wednesday. And when Thursday went through it, that will be considered a breakout. And if you trade a breakout, that means that at that point you trade to the short side. So you short the market, and like I said up here, you put a buy stop above the area where you enter. I'm not saying it's exactly at that point where the buy stops are, but anywhere above that, there could be buy stops. Those buy stops to stop their when they're losing money and the market is not moving their way. So that's why I have that mark there, that above there, there's buy stops. And that's basically liquidity. Buy stops are liquidity, sell stops, entering and exiting the market. So yeah, back to the 1 hour. So the market today is going up and a retracement after a big downward movement that got rid of such a big trading range. Actually, I think it retraced it multiple days back down. Yeah, it basically retraced 2 days back down on that one movement, and then it stopped on the range of Monday, which had a gap that we had measured to find our projected target for it. So right now the market is bouncing, which is completely expected after such a big move. And no big news for a sell-off beyond knowing what we already know about inflation, interest rates, what's happening in China, that Powell is speaking today from the Jackson Hole. And here we are. So usually when I see formations like this and the price breaking down like this, I would like to see the price go up against it and try to go back in. Price didn't do that. I'm not saying it cannot do it, but like I always say, I have to be prepared for everything. So, and like I said, trend lines are just visual information, so it's always good to visualize from different perspectives. So maybe from the one that I had, this blue one that is dashed that I have here, maybe the pricing went back up and retry going in, because actually the trend line that the market was following was this other green one that I just put in. And as you see, the price did broke down from that one, and then the hour after it went to it trying to get back up, and it got rejected downward again. So it might be that reason why it hasn't gone back up there. And like I said, I'm not saying it cannot. It may actually, and get rejected and keep going down. That's one possibility. Or we might actually go above the area that I mentioned before too. That is the exit liquidity on top, and reach the targets. But right now, although the market in itself is favoring a downward movement that will be projected all the way to this level, 14,680, almost the low that we hit on Friday. But if this is true, that means that the market may hit right there and not go lower, which could mean that we have a low set in place, or it could also mean that we might keep getting lower. So here's the deal. We have to wait for Powell for whatever he says, and then from that on we can create a bias for next week. But for today, I have my trading plan already. Seeing this pullback right now, I'm gonna expect the market to reach higher, maybe into these buy stops, maybe all the way up to this line. But I don't get to choose how things work. So I'm always reacting to how the market works in itself. So I read what I see and I trade it. So today is Friday. It might be a volatile day. So stay safe, don't overtrade, and see you next week.